This conference will now be recorded.
And let's see, we can share our screen. What happened to y'all cameras today? Am I gonna have not have to take roll today? Just don't worry about it. Just
This website doesn't allow me to show my camera for some reason.
okay.
It's a bad hair day, Mr. Boyd.
Is it?
Yes.
But what if we were on campus? What would y'all be saying? What would y'all be doing then? I thought y'all were
Put,
all ready to
put
get
on
back.
the put on the hat.
All right. Okay. So we have financial accounting review problem 4, and what I decided would be that we were working in team. We're working in teams, and that way uh, we would then go back to an individual problem on Thursday. But I want to make sure that everybody has a good basis background in the financial part of it. So that'll make it easier as we do other parts. Now, my focus is having you work in Excel, okay? Excel will add and subtract things for us. And so we like to work in Excel. So let's begin to work this problem. And let's say we invested 200,000 in the J. Sharon car company. Can we make this transaction?
Yes.
Okay, so tell me about it. Can anybody make this journal entry?
For number one, it's a type one, so we're gonna debit cash for 200,000 and then credit common stock for 200,000.
Okay, so what we said was whenever we're making journal entries, it's a couple of things we look at. First thing, we're going to look at this chart of accounts to get our transaction types. And typically, when we start a company, we're issuing stock. That's how you start a company. You got to put cash in the bank. And so we debit cash and credit common stock. When cash comes in, we debit cash. When cash goes out, we credit cash. And then sometime we'll have transactions that don't impact cash. But the first thing you always are going to do is to get a transaction type. After you get a transaction type, you got to go to this chart of accounts to get the numbers for the accounts that you're going to be using. So that's how we make journal entries. And the day will be, kind of generic in terms of who's called on, but we will repeat this next time. And that way, it'll be a different problem. I think the problems should already be in there so that we go through the whole process. Are there any questions on what we just said in terms of making the journal entry? Are there any questions? Okay, so let's go ahead and make this journal entry then. So let me just see if I can. some of this is the same. So can everyone see this?
Yes.
Can everybody see it? Okay. And when we're making journal entries, we first of all put down the type. It's a type 1. And how much was the investment for in this problem?
200,000.
200,000.
So it was 200,000. Okay. Now the second thing we're going to do is what? We're going to post it to the T accounts. So let me clear these out. And you should be pulling up this T account, this spreadsheet and working with me. Okay, so in this journal entry, if when we post to the ledger, we go back to the journal entry. If it's a debit in the journal entry, it's a debit in the ledger. If it's a credit, it's a credit. So when we go to the T account, we're going to debit cash 200,000, and we're going to credit common stock 200,000. Are there any questions on what we just did? We made the journal entry, then we posted it in the ledger. Are there any questions? Can everybody do that? So if I gave you a quiz, everybody could do that, correct?
Yes.
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 Okay. What's our second journal entry? Purchase 20,000 in supplies on account. So we're going to go back to journal entries. We need a type,
Is that a type 7?
Wouldn't it be a type 12 because it's on account?
right? It's on account,
No.
so we have to go to type 12 because cash wasn't paid. So we're going to debit what? The account, what?
Supply.
We're going to debit,
Supplies.
that's account what?
130.
130.
We're going to credit what?
Accounts
Accounts
payable.
payable.
What account number is accounts payable?
301.
What was our amount?
20,000.
So that's a journal entry. Always a debit and a credit. They have to be equal. So it's always two accounts and we have a type. Now, when we get to transactions 3, 4, and 5, what are we doing? When we get
Inventory
3,
sheet.
4, and 5, we're doing what?
Inventory.
We're purchasing inventory. It's 3,000 pairs of shoes each time. So when we make those purchases, so in journal entry 3, we're going to debit inventory. And what are we gonna credit when we buy inventory?
Accounts payable.
So we don't ever typically pay cash inventory. We got to make sure it's there. We don't pay the delivery driver. What's our account number for inventory? What's our account?
120.
What's our account number for inventory?
120.
Excuse me, accounts payable.
301.
301. So if we purchase 3,000 pairs of shoes at $10 each, how much is that?
300,000. 30,000.
Okay, 30,000. What's our type again?
12.
It's going to be a 12 purchase on account. And so we will repeat this 2 times. So each time we purchase that inventory on account, same account numbers, same type, 12. What's our amount in transaction 4?
60,000.
60,000.
What's our amount in transaction 5?
90,000.
How much?
90,000.
Oh, this what am I gonna do with now? Okay, so we have 3 inventory purchases. Okay, so now what we got to do? We got to take the 30 and 60 and 90 and put it in the T accounts. So we go to inventory, 30,000, 60,000, 90,000. And we're going to put those same amounts where? In accounts payable. So I just posted them all together. Any questions? We're also going to go to the inventory chart. They don't have a beginning inventory in this problem, so we purchased 3,000 and when we're selling inventory, we keep track of it, a chart like this. And so it's at 10, 20, 30. So 30,000, 60,000, and 90,000. Then we'll take these, we put them over here in our ending balance. So anytime we purchase something, so in the purchase column, then we move it to the ending balance. Are there any questions on anything we just did? Are there any questions? We just bought the inventory, and so we purchased it.
Were you gonna post this on Blackboard for review if we want to go back to it?
That'll cost you $100, Faison.
I already paid it in my tuition.
Okay. So yes, that's a good point. I will go ahead and put this problem up so you have it for review. And remember, we are reviewing again on Thursday, so just to make sure everyone has it. And so we'll push everything back so that we can make sure everyone has it. But whenever you buy inventory, you keep an inventory chart on it. Let's go back to our journal entries. Purchased $250,000 in equipment, paying $25,000 in cash, and signed a note uh, for the balance. 5-year life, estimated salvage $50,000. So here we're just concerned with 6 in purchasing equipment. Okay, so how much equipment did we purchase? How much equipment did we purchase?
$250,000.
250,000.
So we're going to debit equipment for $250,000. What's our account number for equipment?
220.
What is it?
220.
Okay. We paid cash down on how much?
25,000.
All right, so we're going to credit cash for $25,000. And we signed a note for the balance, which is what?
225,000.
225.
Okay, so what's the account number for cash?
100.
100.
Note payable?
350.
350.
$350. Here's our 225. So what are our types going to be? For the cash portion of the equipment, what type is that going to be?
Wouldn't it be a 7 and 12?
7 for the cash portion, 12 for the note portion. So whenever we have more than one account, we got more than one type. But notice the debits and credits are equal. Do we see that? The debits and credits are equal. And that always has to be the case when we're doing the journal entries. Let's see if we can get these posted. Let's see. Let's see. 4, 5, and 6. A lot of times it's good to put those journal entry numbers in so you can go back and check. And what are we, other than we purchased? The 20,000 in supplies on account. Did we ever post that one? I guess we didn't. So this is 2. So let's go ahead now and post the purchase of the equipment. So what I'll do, I'll just put it, I'll change auto to equipment. So that was for 250,000, correct? That was transaction number 6. We paid cash down of $25,000. That's a 6. Then we signed a long-term note for the remainder. So if it's a debit in the T account, in the journal entry, it's a debit in the T account. If it's a credit in the journal entry, it's a credit in the T account. Are there any questions? Are there any questions at this point?
No.
No questions. Okay.
One question. What was the types for that last one?
Okay, let's go to the journal entry for the types. For the amount related to cash, that's type 7. For the note part of it, it's a 12, so we had 2 types.
Okay, thank you.
You're welcome. So now we have our first sale. We sell how much? What do we sell? 4,000 pairs of shoes at 100. What's our type?
Type
Type
2.
2.
It's type 2. So we're going to debit cash. What are we on credit? What
Sales.
might we credit sales?
Well,
Sales is 500, bro.
Cash is 100 and sales is 500. And what was our amount?
400,000.
400,000 seems like a good amount to me. Now let's go ahead and post that. So this is transaction 7. So we're going to come in here. 7. What are we going to credit? Sales 400,000. And we sold 4,000 pairs of shoes. So we know something else has to happen, correct? And what's that?
Cogs.
Since the shoes happened, so we're going to debit cost of goods sold and credit what?
Inventory.
We're going to credit inventory. As we don't have that many shoes there, so we don't want it staying there. So let's see. So we got to come up with this amount. So we go to our inventory flow chart. And how many pairs of shoes did we sell? 4,000. And so now we want to utilize this column so we can determine how much is going to be in that cost of goods sold entry. We sold 4,000. So we did what? We sold all of these, correct? Since we're using FIFO,
We sold the first part of that 3,000 at 10, and then we sold 1,000 at 3,000 at the cost of 20, and
it says
then
FIFO. It
yeah,
says
first thing first up.
so we sold all of the 3,000. And then what are we going to do? We're
We
going to
used the
sell
part
another 1,000 at 20. So that becomes what? 20,000, correct? And so our total cost is going to be what? 50,000. But when using FIFO, we're selling the old ones first. So we needed to sell 4,000. We sold all of these. So they're gone. Not worried. And then we sold part of those. And so now, if we look at what we have left, we've got 2,000 at 20, or 40,000. We have all of the 3,000 at 30, 90,000. So that's what we got left. And our cost of goods sold is 50,000 for the 3,000 we sold. So we had 9. Okay, we sold 4. We got 5,000 left. Are there any questions? 50,000, 50,000. And we, of course, are going to do what? Got to post this to the T accounts. So in journal entry 7, we're going to credit inventory for 50,000. And we're going to debit what? Cost goods sold for 50,000. Are there any questions? Okay, let's move to our next journal entry, which is what? A sale on account of 3,000 pairs of shoes for 100. And so, what's our account number for COGS, by the way? Inventory is 120. What's our account number for COGS?
601.
Okay, so when we make the sale on account of 3,000 pairs at 100, so this is a 2. And what's this journal? What's this type where we're allocating the cost of the asset to inventory? What's our
Account
type?
receivable,
Type what?
type 2. Oh, wait, type 15.
Now I'm on cost of goods sold inventory right now, and the one above it. What's our type here?
16.
What does 16 say? What does 16 say? I just asked what it says. Uh, what does 16 say? Transfer inventory to cost of goods sold. Sounds good to me. So we're gonna put that 16 in here for this type.
So number 8 was 16. The type is 16 for problem 8.
We just went back to 7 and put our types in.
Oh, okay. So that's for number 7. The type is 16.
Right. Okay. In number 8, we have what? A sale on account. So we had a cash sale. Now we have a sale on account. What's our type going to be?
That a
With the
type
sale,
15?
that's going to be a type 15. So our type is 15. Move 8 down 1. So what we're going to debit?
Accounts receivable.
Okay, we're going to debit account receivable. What we're going to credit? What does 15 say we credit?
Cash.
I don't know if 15 says that.
No, sales. I'm
We're gonna
sorry.
credit
Sales.
sales.
They
Sales.
got credit sales. What's our account number for receivables?
110.
110,
Sales?
500.
500,
Our amount?
300.
100,000.
That's 300,000. We got to post that. So let's go to the T accounts. So we're on number 8, correct? So we're going to go to account receivable 8 and put the 300,000 in. What we're going to credit? Sales of 300,000. Any questions? Now we got to make the same journal entry here. And it's going to be a 16 once again. But what's the amount? We go back to our inventory flow chart. And it says we sold 3,000 pairs of shoes. So now we're going to sell all of these. But since it's 3,000, we then are going to what? Dip into this layer and sell what? Another 1,000 at 30. So that's going to be 30,000. And so our total cost of goods number is going to be what? 70,000. What do we have left in inventory now? 2,000 at 30, 60,000. So the purpose of the inventory flow chart is to keep track of the inventory that we're selling, and then we use this middle column to get the cost of goods sold, and that's what goes in that journal entry. And it's never the selling price; it's always cost. So this would be 70,000. Then we're gonna post that. So we're going to the T accounts with this 70,000. We're gonna credit inventory for 70,000 and debit cost of goods sold 70,000. So any questions on those two involving the sale of inventory? Any questions? Then it asks you to calculate some depreciation. Can everybody calculate depreciation in here?
No.
Who said no? Well, everybody else can.
Melanie Mays.
Melanie, you said no.
I
Okay,
need to review over it.
okay. Well, that's why we're reviewing. So we're trying to calculate depreciation. First of all, what's our type?
14.
In a 14, what do we debit?
Depreciation expense.
We're going to debit depreciation expense. What's our account number?
615.
And what we're going to credit?
Accumulated depreciation.
So we're going to credit accumulated depreciation.
Let's
What's that account number? What is the account number for accumulated depreciation?
Isn't that 221?
Is it what? Y'all got the sheets? Two what?
221?
All right, I'll take your word for it. Now let's calculate this depreciation. The cost of this asset was what? How much did it cost back up here? 250,000. Less the salvage, because we're doing straight line. We don't again salvage. So the salvage we said was what? 50,000. Okay, so our depreciable cost is simply 250 minus 50 or 200,000. Our life we said was 5 years. So all we're going to do is divide 200,000 by 5 years. And so what's our expense? What's 200,000 divided by 5? So we take the cost, take total cost, reduce it by salvage. Now we divide it by the life. So what's 200,000 divided by 5? Anybody calculate that?
40,000.
That's going to be 40,000. So that's our journal entry amount, 40,000. So all we did was to look at our cost, 250. Subtract out the salvage, 50. So we own depreciate 200,000. Then we divide it by the life, 5 years, to get 40,000. Now let's look at posting this entry. So we'll just put depreciation expense here. So we'll just insert it here. And that's transaction name. And we're going to go up here to accumulate depreciation. So accumulate depreciation is what's called a contra asset account. It has a credit balance. We want to always know what the equipment originally cost. And so we keep all the depreciation year by year in this account. So cost, depreciation. Next year, cost will be the same, but it'll be another 40,000. So every year we write off 40,000, but we will always know what it costs, and we know the accumulate depreciation over those years. Any questions? What's our next journal entry? Ending supplies was $5,000. Make the adjusting entry. How much did we buy in supplies? 20,000. It says the ending supplies is 5,000. So how much did we utilize in supplies?
It'd be
15,000.
15,000.
15,000. If you had 20,000 in the bank at the beginning of the month and 5,000 at the end, you must have spent 15,000. So this is journal entry 10. So let me put the 10 here and the 10 here. Now let's go back to our journal entries. So we're going to debit supplies expense, credit and we're going to credit supplies. What's our account numbers? What's the account number for supplies expense?
687.
And this should be supplies here. And supplies we said is what? 130.
130.
And those amounts were what? 15,000. What's number 11? What's our type?
10.
55.
Pay the dividend. So that's type 10. What we gonna debit?
Cash.
No.
Not
Pay.
cash.
Can't
We're gonna
can't debit.
Dividends.
We're
we're gonna
gonna
debit
debit.
the expense.
What's the account number?
455.
So we debiting dividends. And what are we crediting?
Cash.
Cash.
How much were our dividends?
10,000.
1,000.
We gotta go and post that. So we always post it. Every time we make a journal entry, we gotta post it. This is number 11. Okay. What's our next journal entry? Collections on sales of account 150,000. What is our type?
3.
That's going to be a type 3. What do we debit in a type 3?
Cash.
What do we credit?
Accounts receivable.
Credit account receivable. Notice that when we collect on account, we debit cash and credit account receivable, not sales. Cash is 100. Account receivable is what? 110. We collected 150,000. So now we have to go ahead and post that. So we go to the T accounts. I'm going to credit an account receivable. Payment on account payable 50,000. What's our type? Payment on account payable. What's our type?
Wouldn't that be a type 8?
Sounds like a type 8. So in a type 8, we're going to debit a liability paid.
That's accounts payable.
Correct. And what are we going to credit?
Cash.
Credit cash. Account payable is what? 301.
Yes.
Cash is 100. And our amount was 50,000. So we're going, and now I got to post this too. So we're going to, in terms of posting this one, the amount was 50,000. So we got a credit cash for 50,000. And we're going to credit, debit account payable for 50,000. Payment on a note payable, 20,000 interest plus 10,000 principal. How much does the bank want?
10,000.
So if you went to pay your student loan and you owe 20,000 and interest of 10, you pay the bank $10,000.
Well, in total, you'll pay 30,000.
Okay, you're gonna pay 30,000. So we gotta pay the note payable first. And so that's gonna be the 20,000 We got to pay the interest too. And that's going to be the 10,000.
Dr. Boyd, isn't that backwards?
Could be payment on the note payable 20,000, interest 10,000. So why is it backwards?
Oh, never mind, I read it wrong.
And the bank wants cash, 30,000. What's our account number for note payable? 350.
350,
Interest expense,
680,
cash.
100,
Got two types here. The note payable portion is going to be what? Payment of liability 8. The interest is going to be what? Payment of an expense 9.
9.
And we got to go post these. So we're going to have this credit in here for the cash. So that's going to be 30,000. You're going to debit the long-term note payable, 20,000. 14. We also are going to debit what? Interest expense. I'll just put interest here, I guess. So the interest expense was 10,000. Number 14. And our final one, what do? What's our final journal entry, number 15?
It'll be a type 9,
So that's going to be a type 9.
and we're gonna debit sales salary expense, which is 610, and then we're gonna credit cash 100 for the amounts of 50,000.
And count number 100. And I got one thing to say. Is your team going to be ready to do this on Thursday? Is your team going to be ready to do this on Thursday? Silence means you already.
Dr. Boyd?
Yes.
Yes, my name is Audrey Williams. I've been trying to catch up with this class for the past couple, like until at the beginning of this class. And I sent you an email today. So in reference to teams, do we ask somebody for teams, or are they already established, or I'm not sure about that. And then in reference to the textbook, I had to get with Cengage today because the ISBN number that you provided is like it's been discontinued or whatever, and it was just a fiasco with getting the book and everything today with them. And I
Okay.
reached out to the lady that you gave me the information. Her name, spoke with her for a little bit, but I finally got the book. So I'm just all over the place.
You're all over the place.
Yes, and I see that all your homework has to be on Excel, and I'm trying to determine if in within the textbook, is there like a program that you plug in the numbers or what, or no?
there's an Excel spreadsheet in Blackboard and course content. And so you
Okay.
just, whenever you're using a spreadsheet, you just go to content on the financial statement review, and there's an
Uh-huh.
Excel spreadsheet, and you just pull it out.
Okay, okay.
So it's there.
Okay. And in terms of group, I emailed someone today. I think his name, I can't hardly pronounce it. So do I ask the group leaders to be in their group?
Yeah, that's a good way to do it.
Okay.
And
Thank
with
you.
and Brianna Simpson says, "How do you know what team you are on?" I'll look at that. I'll look at everybody who's here today and see if you're on a team, and I'll work through to that. Okay. But we know, there have been some issues and problems. So we understand that, right, Eric? But it's good if everybody come every day, and that helps us.
So, Dr.
Townsend.
Boyd, if we're going over this now, are we just presenting it again on Thursday?
Yeah. Uh, I'll look at it and see. I have to see. I have to see when we get to class what happened. What people read it. People saying that there were some internet issues. We have 20 people here, so I'll see when we get to class. Then I can always, with people, I'll look at the teams. We'll work on that. I can always put you, if you were here today, then I'll just put your team to work, and I could review with other people. So that's kind of the advantage of this system. I'll see where we are. If you're on a team and that team's ready to go, you go. If not, we'll do something different. But we'll see on Thursday. We'll look at it and see. But we realize, there have been issues, the registration, the continuing virtually. So we understand that. So we're going to be lenient. That's why we've got extra time on it. But there should not be any excuses after the day. Okay. So, but as I said the first day, if you're in class, with your camera on, you see, people don't have their camera on, so I don't know whether they're paying attention or not, Audrey. But if you're in class with your camera on, paying attention, and you aren't having one of those bad hair days and everything, and I see you paying attention, then then it's on me to make sure you passing if you putting in your time. But if I can't see your face, I don't know what you're doing. So everybody was told that, Audrey. But you can see they're confident. They're on their own. They got their cameras off, so they're confident that they can just knock this out.
Okay, my camera's off. I'm having a bad hair day, but I'm here. And from now on, I'll try to have my camera on.
Yeah, I got you next time, Dr. Boyd. I didn't know you wanted them on, but I got you. I'm gonna book the
All
hair
right, so
appointment right now.
what happens is this: when people have their cameras on, they pass the course. When they don't have them on, they don't pass the course. I mean, that's the history. So, and like I say, if you got your camera on and you're doing your work, then I'm committing to making sure you pass. But so that's just it. If your camera's not on, I mean, it's just like we're at school. If you on, you know, if you're in class, then you're there to do the work. If you're not, you're not. So this works the same way. Okay, so now we need to do it. What do we need to do now? What do we need to do now? We
Trial
made
The
balance.
balance statements,
do what?
the trial balance and statements.
We want to do the trial balance. And once we get that trial balance done, then we want to begin to do the financial statements. So that's what you expected to be able to do. Okay. So what's the trial? So what is the trial balance? We made all these journal entries. Now we posted to the ledger because we want to know how much is in each account. So the purpose of the trial balance is what? Is to determine if everything is correct. So let me just go in here and clear my contents. So let's see how we're going to get this trial balance and why we like to use Excel. So This is why we like to use Excel. You can see, right, Audrey?
Yes,
You
sir,
see?
I can see. Yes, sir.
Well, the reason I said that in my last class, this person said they could not see the screen and could not see what was going on. But when we have Excel, when we get ready to determine balances, we don't worry about our cell phones. We go here and we just hit auto sum. This tells us that our total debits are 750, our total credits are 165. So then we're going to come in here and get an equal signs. We put a formula in. We're going to open some parentheses and we're going to click on the 750. Then we're going to put a minus sign in and then we're going to click on the 165. We're going to close our parentheses and it tells us the balance is 585. So how you like that, Ms. Williams?
It's looking great. It's looking.
So it's telling us that we got 585,000 in cash. So this is one of the main reasons we use Excel. We don't have to be on the cell phone. We can sum them up and take the difference. So we're going to take this difference and now we're going to go where? To our trial balance and put cash in here. And that was 585, correct? Okay. We're going to go to receivables and do the same thing. And I'll just put these balances in red every time we get a balance. So in receivables, it's 300 and 150. So we know that that balance is going to be what? 150. I'm going to put that down, click it, put it in red. Then I'm going to go to the trial balance and now put the account receivable in here. I'm going to put that in for 150. And I'm going to keep these accounts in order. I'm not doing it in the order of when I made the journal entries. I'm doing it in the order of that chart of account. So it is critically important. It's critically important that when you put these accounts in, let's see what's underneath here. So that chart of accounts, everything needs to come in this order. Cash, receivables, on down. Then the liabilities, then the stockholders' equity, then the revenues and the expenses. That is the order that the trial balance has to be in. So going back to the T accounts, we're going to go to inventory. We do an auto sum here. And if we auto sum them, we have debits of 180 and credits of 120. So we come in here, put this formula in here again, equal. We click on the 180. Well, let me gotta put that parentheses in. Then we're gonna click on the 180. Minus, we're gonna click on the 120. We're gonna close our parentheses. We got the 60,000. So we're gonna go down to the trial balance and put down inventory next for 60,000. We go back to the trial balance, the T accounts, supplies. Put this in red. Supplies, we already know the balance is 5,000. So we go to the trial balance, put supplies up next, 5,000. Go back to the T accounts, equipment. Equipment is 250,000 and the accumulated depreciation is 40,000. Now the equipment has a debit balance of 250. Accumulated depreciation has a credit balance of 40. They got to come into the trial balance the same way. So we add up and determine the side of the large and put it in here. Here we only got one item. So we're going to come in with the trial balance. So equipment is coming in 250,000. Then the accumulated depreciation, all of this is just procedural. You got to get the journal entries correct. Okay, so we go back to the T accounts. Got to pick up these liabilities. So let's see, has this subtracted this automatically for me? 50, what we paid, and then we had 4 credits. Okay, so we're going to auto sum this. But this time we over here because we know the credits are exceeding the debits. Equal, parentheses. Then I'm going to click on the 200 minus, click on the 50, shift parentheses. Accounts payable is $150,000. That's the ending balance. So now we're starting on the credits on the trial balance. So I'll skip a line just in case I left something out. But accounts payable, so accounts payable was what? 150,000.
Is this our last entry, Dr. Boyd?
Got to do every one.
I mean, like, because we have, some of us have another class to go to. That's what I was asking.
Yeah, and I guess see if that other class was virtual, y'all could go right to it and still be here. But that's not the case. Okay, I will put this up as it is. Then can't you all now finish the trial balance and balance it? So that's a good stopping point. Can you now finish putting all the accounts in the order that they're in here and get a balanced trial balance?
Yes.
Is there
Yes.
any, okay? So everybody can
Yes.
do that. So that's what I want you to do. Finish this up and get a balanced trial balance. After we do that, we'll do the financial statements and closing interest next time. We'll do that over the first 30 minutes. Then we should be able to go to our teams, and I'll give you about 7 or 8 journal entries, and I will ask you to do the same thing that we're doing, with your team next time. So when we get in here, I'll look at the teams, we'll see where they are, and we'll even out and get you in a team. And we won't be in a team right at the beginning since we have some different and new people. But after the first, say, 30 minutes of class, at 20 minutes or so of class, when we finish this problem, then you'll get a short one with 6 or 7 journal entries, and I'm going to ask you to do the same thing. Does everybody see what we're going to do next time?
Dr. Boyd, would this be on Blackboard as well?
Yes. So I'm
Okay.
going to